So next question, when we can conclude that the investor has changed the strategy of how to invest in equities over time, have the investments, the equities themselves, have they also changed due to globalization? We think they have. Question for you: how many of you had a Samsung phone or a Samsung TV 17 years ago in 1996? I didn't have one. I think I didn't have a mobile phone back then. Anyway, look at Samsung and the breakdown where that company receives their revenues from. In 1996, Samsung made 60% of the revenues within Korea and another 25% within Asia and Africa. Today, that picture looks a lot different. So Samsung is a global company and sells their phones and TVs all over the world. So the sources of revenues from Samsung has diversified significantly. Why is that important? Well, and okay, before I go on, this is an example for two different Russian companies, Gazprom and Lukoil. They look very differently. Gazprom has a much more condensed distribution of their revenues, mainly from a much larger part from emerging market Europe, close to 50%, and the rest comes from Europe, whereas Lukoil, in the distribution of their revenues, is a lot more diverse, in terms of regions. So again, why is that important for you as a portfolio manager? No matter if you look at Gazprom, Lukoil, or Samsung. Let's take Samsung again as an example. 17 years ago, you as a portfolio manager were buying Samsung, and you could be pretty sure that with that investment, you were betting on the Korean stock market, right? Today, you have exposure through that stock to many other countries. The question is, do you know about it? And do you know by which magnitude, by which level your exposure with that Samsung investment is towards the US, towards European markets, towards Africa? To summarize, let's assume you hold a well-diversified global equity portfolio. In this case, we have taken one more time, the MSCI All Country World Index with about 2,500 securities as an example. Now let's consider the All Country World Index is your portfolio that you manage from day to day. If you look at the portfolio from a market capitalization standpoint, this is the picture. Your Excel sheet or your portfolio management system would tell you you're 47% in the US and your allocation to emerging markets is 13%. If you look at the same portfolio in terms of where do the revenues of the companies that I'm holding come from, the USA goes down to, take a look, 28%, and emerging market exposure is even higher than the US, it's 32%. So this is one thought I wanted to leave with you, which is another result of globalization, and that result is not only investors, but also investments have changed.